Good evening and welcome to today's 18th Vasudhaiva Kutumbakam webinar. And today we have the topic of corporate social responsibility. And the we have with us Naman Shah, who is the director of Deloitte Huskin and Sales LLP. So today, before starting the session, as a customary, we do our institute's anthem. And just I will just have the institute's anthem. Just to introduce Sri Naman Shah. Naman Shah has experience of more than 14 years in working with education and ERI sector. He has specialized in area of international tax, domestic tax, and regulatory aspects concerning the sectors that he focuses on. He is currently actively focusing on tax and regulatory issues faced by foreign education providers wanting to carry out activities in India or setting up presence in India. In this regard, Sir has also advised various foreign universities and international schools for developing their India strategies, setting up India entity structure, operational models, foreign investments in India, and repatriation thereof, regular task and also regulatory retainership. As a natural extension of experience in education sector, Sir has also started focusing on international donor organizations looking to provide foreign grants to India NGOs and related FCRA compliances in this regard. Apart from FCRA, Sir has also focused on other tax and regulatory issues faced by the NGOs. Ministry of Corporate Affairs introduced the mandatory CSR provisions by the India companies meeting certain threshold. Sir has started focusing on the CSR requirements of the corporates and providing assistance on tax and regulatory issues relating to CSR compliances. Sir is a member of the Institute of Chartered Accountants of India and has degree in Bachelor of Commerce from Mumbai University. Sir has also written various articles, white papers regularly in professional journals and publications on current subjects and developments in education, NGO, and CSR space. With this, I welcome Naman Shah, sir, for this today's Corporate Social Responsibility Regulatory Provisions webinar. Over to you, sir. Sir, now you can share your screen, sir.
Thank you, Divendu. Divendu, am I audible?
Yes, yes, you are audible, sir.
Okay, so I am just sharing my screen. Let me know, if the screen is visible.
Yes, it is visible. Sir.
1 second. Is it visible now?
Yes, yes.
Okay. So, good evening, everyone, and thank you for joining this webinar on the corporate social responsibility. As a brief introduction given by Divendu sir, I have the experience of overall 14 years, and I have been qualifying in 2010. And thereafter, I am working, with the different Big Four. So earlier I was in KPMG, and now I am in Deloitte since last 10 years. The interest in the social sector actually kind of garnered in me ever since I qualified in 2010 when I joined the first organization after qualification. there was good amount of amendments and good amount of developments which were happening in FCRA law when it got kind of revamped. The earlier FCRA and the new FCRA law came into picture, and there were already the talks of the new company law coming in with this CSR provision. And that's when I realized that this is an upcoming sector. Obviously, internationally there was a lot of discussion on the corporate social responsibility. There was a lot of discussion on the climate change and everything since last 10-15 years. And I garnered the interest in this area. And ever since the provisions and ever since this area is being developing, we are kind of focusing on this as a team. So today's discussion is basically to take through what are the CSR provisions under the company law and what is the development over the last 10, 11 years that has happened, and what are the different concepts which are there under the CSR law which the company management needs to kind of take into consideration. Ever since 2013, the CSR law has come into picture, and especially a very commendable note to be made over here is that India happens to be first country in the world which has mandated the CSR provision and which is regulated, by way of legislation. In the other jurisdiction, there are no such, actually legislative requirement for the corporates to carry out the CSR. Obviously, the corporates are carrying out on a voluntary basis, but India happens to be the first jurisdiction, and this was the brainchild of obviously the Sachin pilot and the erstwhile government who had basically been instrumental in completely revamping the company law. With this background, the idea is to give you a brief overview, okay, on okay, the CSR law is applicable to first of all which company, and what are the provision that the companies and the management of the companies needs to take into consideration for complying with the law. So if I have to talk about the eligibility, the company meeting any one or more of the turnover or the net worth or the net profit criteria which is flashed on the screen needs to basically meet the CSR requirement, and 2% of the average net profits of the past 3 years needs to be spent towards the corporate social responsibility of the company. And obviously, earlier when the law came into picture, it was more of a voluntary. Obviously, it was legislated, very well regulated, but it was still voluntary in the sense that if the company, for whatever reason, is not able to spend towards the CSR, then they have to basically just disclose in the board's report that okay, what are the reasons that I'm not able to spend towards the CSR activity, and what are the steps probably taken by the company to basically increase the CSR spend over the period of years. Having said which, since last 5 years, the other half of the decade that we have seen through, the requirement of spending is becoming more from voluntary to mandatory. And if the spend is not made, then obviously there are the other compliances to be carried out, by the board, which we will discuss in the subsequent slides, as against mere disclosure in the board report that the spend was not basically made. So with this background, we take up to the next slides discussing about what happens when there is a shortfall, what are the types of activities under which the CSR is required to be carried out, what are the projects, what are the disclosure requirements, what happens if there is an excess, what happens if there is a surplus over the CSR activity. Right. So what has happened, as I said, last 5 years, there is a good amount of development. Ever since in 2021, there was the CSR rules which got revamped. There was a new FAQ, which came in 2021. And with this development, there is more and more of responsibility and onus which is put on the different uh, teams of the company or different management people of the company, like CSR committee, board directors, CFOs. All the three different KMBs are basically given the responsibility to manage the overall CSR function and do the CSR compliances. To start with CSR committee, the CSR committee in a way is the main brainchild of the CSR to be done by the company, in the sense they have to formulate and recommend what should be the CSR policy, what should be the annual action plan through which the company will actually spend overall budget of the CSR towards which particular activity. They have to recommend the amount that okay, this is the amount that is required to be spent as per the average of the last 3 years financials. They have the overall checker responsibility of monitoring the CSR policy, so on and so forth. When it comes to board of directors, the board of directors has basically an overseeing and obviously the approver responsibility, in a sense that at the end of the day, the ultimate responsibility that the company ensures the company meets its 2% CSR activity. If it does not meet the 2% CSR activity, then all the other compliance that will be discussed in the subsequent slide is done by the company. The board has to basically approve whatever budget and whatever annual action plan is basically carried out or suggested by the CSR committee. The ultimate responsibility remains with the board of approving the annual action plan, approving the CSR policy, and actually ensure and monitor that the projects are being happening in the watch of the CSR committee. And when it comes to CFO, interestingly, there has been an amendment, 3 or 4 years back, that the CFO also at the end of the year now needs to certify that the company has actually spent this 2% towards the CSR compliances that the company is required to be made. So basically, all the strata of the management, all the different types of the management of the board are given a responsibility and onus in a different shape and form to meet the CSR compliances of the company. With this, what would be the eligible, say, CSR expenditure? What are the ineligible CSR expenditure? There's a legislation by way of section, by way of CSR rule, by way of a detailed FAQ have given a lot of guidance that what should be the eligible expenditure and what should be the ineligible. For example, any expenditure that is done directly by the company on the CSR project, like say expenditure towards tree plantation, expenditure towards any other activity which falls overall in the charitable in nature, needs to be basically or it's considered as eligible CSR expenditure. Secondly, for developing any capability of the internal CSR function in a way, suppose if we hire CSR head, we hire certain managers to manage the CSR project, that also is basically eligible as CSR expenditure. However, obviously there is a overall cap which is there, which is 5% of the total CSR spend, beyond which the administrative overhead should not be done. And the thirdly, which is the another modality of implementing the CSR project, is by contributing to the implementing agency. We will discuss in the subsequent slide what do you mean by implementing agency. But in a net, it is basically third party NGOs or the in-house NGOs of the corporates who will be implementing the CSR projects for the company, where the company itself cannot implement the CSR project on its own. So all these kinds of funding are eligible expenditure. Obviously, on the other side, to avoid any misuse of this particular CSR funding by the corporates, there are a lot of examples and a lot of guidance given, like which are the ineligible expenditure. For example, if there is any expenditure incurred towards fulfillment of the act or which is a statutory liability, it will not be considered as CSR. Secondly, employee volunteering hours. What happens is many times when there is a volunteering activity done by the employee, the companies used to represent before the MCA and say that, look, so many employees of mine are spending the time towards the CSR activity. So we will consider their time cost as part of our CSR cost, because we are paying them salary, they are going on a CSR activity, but ultimately there is no business benefit out of it. So that the specifically is basically now excluded from the CSR, while obviously employee volunteering is encouraged by the regulation, but cannot be encashed. The salary paid to the employees cannot be encashed. Thirdly, say any expenditure which is not in conformity with the Schedule 7. So Companies Act has specifically given a Schedule 7 which lays down various themes. We have it in the subsequent slide, under which the CSR activity needs to be done. So if there is any activity which does not conform with the inclusion in the Schedule 7, then it does not basically tantamount to a CSR activity. CSR activity obviously taken outside India is not considered. The idea and the intention of the whole provision is that the corporates in India bridge the gap between the government funding and the local. So basically anything, any activity done outside India will not be considered as CSR. That may be an other activity which is not forming part of this 2% criteria. Any activity that benefits the employees or their families, again, that is also not part of the CSR, because the idea is that the CSR should benefit the society at large, and it is not merely only the employee or their families who should be benefited. Similarly, any contribution to political parties is also not considered a CSR activity. So second last point is important. Contribution to the corpus of the implementing agency, in the sense that if there is any contribution to the corpus of an NGO, that will not be considered as a CSR activity, with the simple reason that if the company basically gives only a corpus to the NGO, and if the corpus remains as corpus in the books of accounts of the NGO, then actually there is no activity which has happened on the ground which will impact the society at large. And that is why in the new FAQ which came in 2021, this corpus donation was specifically prohibited. So in a way, while there are guidances, while there are basically a lot of the FAQ clearly says that the law needs to be looked at, in a more broad sense. But obviously, whatever ineligible expenditure are there will not be considered as CSR. Coming to the next topic, what happens if the company is not able to spend the 2% after the amendment in 2021? Earlier, as I said in my introduction, earlier it was only basically the board needs to say that why and give the reasoning why the company could not spend. But now the requirement is more onerous, in a sense that the company has to first of all decide that, okay, if your project against which there is an unspent, in a way where there was an outlay of the CSR expenditure. For example, say if the company said that, okay, 1 crore is the amount which I will outlay towards this CSR project in this particular year. And at the end of the year, on an overall basis, if there is a short spend, the entire CSR 2% could not be spent. And the short spend is because of, say, one of the project which is delayed. Then in that case, there are the company and the board has to basically first determine that what is the reason for the shortfall. If the reason for the shortfall is because of any ongoing project which is basically getting delayed for whatever reason, then the company has the option to deposit this particular money in an unspent CSR account specifically opened for that particular financial year with any of the scheduled bank. The company has to open the account in any of the scheduled bank and deposit that unspent amount within 30 days from the end of the financial year. But obviously, if it is towards the ongoing project, but in other, on the opposite, if basically there are no ongoing projects towards which the outlay can be allocated, that means there were no projects which were identified by the company during the year, or maybe the projects identified were less as compared to the total outlay of 2%. Then there is a requirement that within the next 6 months from the end of the financial year, the company should transfer the money to Schedule 7 fund, which is a government fund. In Schedule 7 of the Companies Act, there are 4 5 funds which are specifically mentioned. For example, is mentioned in the slide. Swachh Bharat Kosh is one of the fund, Clean Ganga Fund, Prime Minister National Relief Fund, or PM Cares Fund. So basically, the government is right now basically mandating that if you are able to spend, you spend on your own. If you are not able to spend or if you are not able to identify the project by 31st of March and there is no ongoing project, then this needs to be deposited to the government. So that in a way, there has to be a 2% outlay of the company for that particular year. Now coming to ongoing project, the another situation is that this ongoing project, which for which the unspent CSR account is opened and the money is deposited into that, what happens, say for next 3 years, even that money is not utilized. So there is a window given for 3 years that after the deposit, you have 3 years to utilize towards the ongoing project. But suppose if that money is also not utilized towards that particular project, then at the end of 3 years, the money again goes back to the government fund because government will say, okay, we have given you enough of the opportunities. I mean, we have given 3 years to complete the project, but ultimately it did not happen. So now at the end of the 3 years, the money needs to be transferred to the Schedule 7 fund. This is the onerous requirement. If there is any contravention to any of the provision, then basically now there is a penalty which was earlier not there, but after 2021 amendment, now there is a penalty to the company that twice the amount which is required to be transferred to Schedule 7 fund or the UCR account or the 1 crore, whichever is lower, the penalty may be applied on the company. And we have seen recently there are lot of notices from ROC or MCA, which has already started coming on the companies wherever there is a shortfall, for this particular requirement. On the other side, when the company completes this compliances for the unspent, then at least the 135 requirement and the 2% requirement is met for that particular financial year. So then it will not be termed as the short spend or the unspent. Once these compliances are made, either you submit in the UCR or you give it to Schedule 7. Right? Next point. So we discussed about unspent, we discussed about the short spend. On the other side, on the flip side, what if there is an excess spend? So in case the company spends an excess amount, then that particular excess can be carried forward for next 3 years to be utilized in the future year if suppose there is a shortfall in any of the future year. So while there is a onerous requirement of giving the money to UCSRA or giving the money to Schedule 7 in a short spend, at the same time, there on the hindsight, on the positive side, the company has also, the MCA and the legislation has also allowed to set off the excess spend for the next 3 years. Secondly, the only point which needs to be considered over here is that in case of the excess spend, and if the excess spend is arising out of any surplus arising from the CSR activity, and what do you mean by surplus arising from the CSR activity is basically that any of the activity that the company is doing, if that activity by itself garners any income in a way, or the money which is lying, say, with the implementing agency garners the interest income, then all those additional income which is arising on this particular activity is a surplus. So the rule says that the company cannot create an excess out of the surplus CSR activity or the surplus arising from the CSR activity. Having said which, if there is a surplus, the surplus has to be again either plowed back to the project, the company cannot use it for the business purposes, or the surplus needs to be transferred to Schedule 7 fund or the unspent CSR fund. But the mandate is very clear that if there is a surplus from the CSR activity, it needs to be basically plowed back to the CSR activity itself, and there cannot be any excess which can be basically considered for the carry forward of the next 3 years. So that goes with the requirement of short spend, surplus, and the carry forward in terms of excess. These are basically the examples of different themes which are given in Schedule 7. Anything to do with poverty, anything to do with health, education, gender equality, in empowerment of women, environment and sustainability, armed forces, sports, rural development projects. So in a way, Schedule 7 covers mostly the entire gamut of the social activity that an NGO or the corporate would want to, carry out. Secondly, as I said earlier, the rule also clearly says that ultimately the Schedule 7 needs to be, or the any of the provision of the CSR needs to be looked at or reviewed more in a broad manner, not to be reviewed exactly in the black and white. Having said which, obviously, any of the activity that the company does, first of all, it should not be a normal business activity, but it should fall somewhere within the themes which are mentioned in the Schedule 7, right? So moving on, we discussed about the one of the more way of implementing the project is that the company either can do it itself or can do it by way of giving the project to an NGO. So that's where the concept of implementing agency comes into picture. There are requirement and the rule that it's not any of the NGOs that the company can basically start using, but the company has to satisfy that the implementing agency or the NGO which they are using, first of all, they are a charitable entity, either a trust or a society or a Section 8 company. Then the NGO and the company should have 12A and ATG certificate under the income tax, which certifies them to be a tax exemption and being a charitable in nature under the income tax law. The NGO, if it is a third party NGO, should have at least an established track record of 3 years. Having said which, if the NGO is set up by the company itself, then the 3 year track record is basically not a requirement. And the last thing which has come in the 2021 amendment is that now the NGOs also have to file the form CSR1 and take a registration from the MCA that this NGO is qualified to basically do the CSR activities for the corporates. So there is, in a way, onerous responsibility on the NGO as well as on the corporate that whenever you select, we have to do a proper due diligence that all these documents or all this registration that the NGO has been, already taken, and then the CSR project should be awarded to them. International organization cannot act as an implementing agency, so it has to be an Indian NGO, and which is registered under the Indian regulations. And the major point is that, as I said earlier, that the intention of the CSR law is that there has to be money which is spent on the ground, and that is why obviously the corpus donation is not allowed. And at the same time, the FAQ also clearly mentions that mere disbursal of money to an NGO, suppose on 31st of March, and the company is mentioning that we have given the money to an implementing agency by way of donation or whatever, and the implementing agency will utilize as and when it comes due or as and when they are in the need of fund, that will not be considered as the right CSR expenditure or the right CSR compliance by the company. The FAQ is very clear that the company has to ensure that the NGO also utilizes that money on the ground and provides the utilization certificate to the company that for the, say, for example, for the March 24 financials, if the company has given an outlay of 1 crore towards the project, the NGO has to ensure, and the company also has to ensure that the NGO does it, that this particular money is utilized by the NGO on the ground, and the NGO should give the utilization certificate to the company stating that this money is utilized. In the event that the money is not utilized by the NGO and it remains, with the NGO, then the intention of the law is very clear that the NGO has to give the money back to the company, and the company has to show it as a short spend and again go back, to the earlier slide that we were discussing, that either you deposit in the unspent CSR account, considering that it is an ongoing project, but for whatever reason, suppose if it cannot be classified as an ongoing project or the project is stalled, for example, then that needs to be deposited into a Schedule 7 fund, which is Clean Ganga Fund or PM CARES Fund. So there is an onerous requirement. As I said, mere disbursal of the money to the NGO will not be considered as CSR expenditure. Then there are some other concepts. One is the ongoing project, as we have been discussing. On the ongoing project part, it is very well laid down in the regulation what will one mean by the ongoing project, which says that any project which goes on for the 3 financial years, excluding the year in which it was started, will be considered as an ongoing project. The date of commencement is also somewhere specified in the FAQ, stating that whenever the company is giving the work order or whenever the contract is awarded, is the time where the project should be considered as the project has been commenced, so that from there the company can consider 3 years for the purpose of the ongoing project. Specifically mentioned in the FAQ that the project cannot be beyond 3 years. So in a what we have been getting a lot of queries from the client is that what if the gestation period of the project itself is say 6 years? If the company is constructing a large educational school, right, then in that case the position needs to be taken that how do you basically design the project in a way that say project phase 1 is one project and it's not basically extending beyond 3 years, and phase 2 so on and so forth goes for another 3 years, and similarly break the project or make it in a right compartment so as to be called as one project at the same time meeting the 3 years criteria. Secondly, the board is given the power if they want to modify the timeline or any of the requirements of the project. Obviously, only it is very specifically mentioned it has to be done on exceptional circumstances. It should not be done by way of a habit, and there has to be a reasonable justification in case there is a a modification required in the project in terms of timelines or in terms of everything. But at the end of the day, the outer limit of the project should still be only 3 years, excluding the year of commencement. So that is the legislation is very clear. And any project beyond 3 years, basically, ideally, does not fall in any of the four corners of the CSR law. Uh, Basically, ongoing projects, as I said, it can be implemented by the company itself, where they are setting up, their own CSR teams and then getting the project done, or maybe done by an implementing agency. Moving on, there is a requirement, and again, this has come in the 2021 amendment, that the company needs to do the impact assessment of the project also. So along with the regular monitoring and evaluation of the project, which is very much the onerous responsibility of the board and the CSR committee, what is brought in the amendment is that any of the company which has an outlay of 10 crores or more on the overall basis in the last 3 preceding years, I mean the average outlay on the overall basis, and for any of the projects which are having outlays of 1 crore or more. So for such projects, if the company is meeting both the criteria, total outlay of 10 crores, average outlay of 10 crores in the immediate 3 preceding years, and the basically the individual outlay of per project of 1 crore, then those projects which are beyond 1 crore, for which the impact assessment needs to be done, and the impact assessment needs to be done by a third party. So that requirement is very clear. The company cannot do it internally. The third party needs to do the impact assessment and basically bring out that, okay, if the company has spent so much money on this particular project, then what is the ultimate outcome and the impact that it has given to the society. Secondly, on the timeline front, the legislation again has given that for any such project, after the project is completed, after 1 year of completion, the impact assessment should be taken. Maybe the intention is that the immediately when the project is completed, obviously there will be an impact, but one needs to see what remains as an impact or what is the final outcome after 1 year of cooling period once the project is completed. Having said which, the legislation is again open that if the company wants to do an impact assessment on a voluntary basis for any other project or the project before 1 year of completion, then the company can very well do it. Separately, there is a specific budget given for the impact assessment, which can be considered as part of CSR expenditure itself. So it is not over and above the CSR 2% budget, but it's a separate impact assessment budget given, which can be part of the CSR. Then the budget goes like maximum 2% of the CSR expenditure or the INR 50 less, whichever is higher, it can be considered as part of. I mean, the company has that much of the limit to spend towards the impact assessment, and hence it becomes very important for the company before start of the project that which project, what is the outlay, and if there is an impact assessment which is applicable for that particular project, then basically at the design stage itself or at the time of implementation stage itself, there has to be enough and adequate documentation to be proved to the third party when the third party comes for the impact assessment. So that is the requirement. As I said earlier, on the administrative overheads part also, it is not the case where the legislation says that the company has to spend only and only towards the charitable activity or the directly with the society or the NGO. There is a budget given of 5% of the total CSR expenditure for the company to meet its internal expenditure, which are administrative in nature, which may not be basically tagged to any project, but these are the overall expenditure, right? Which can be which the company has to incur for its CSR function. It may be like CSR employees, it may be the assets which are like laptops and the desk of the CSR function, so on and so forth. But the rule which defines the administrative overheads very clearly says that such expenses which are directly incurred for designing, implementation, monitoring, and evaluation of a particular CSR project should be part of the CSR expenditure itself and should not be considered as part of administrative overheads. Secondly, there it is another anomaly that when the company law, when one reads the company law about the administrative overheads, it says the overheads of the company. What happens to the overheads of the implementing agency? So there is an FAQ which says that the overheads which are capped under 5% are basically the overheads of the company itself, and the overheads of the implementing agency cannot be considered as administrative overheads and cannot be claimed by the company. So basically, there is an anomaly stating that, okay, what if the company itself spends 5% and the implementing agency also spends another 5% out of the money which was given to them? Maybe one can take a position that implementing agencies overheads are part of the project because they are actually going and implementing the project. But in a way, what we have been advising is that overall, on the overall basis, the company should still, try and restrict the expenditure towards 5% administrative, whether it is its own expenditure or the expenditure of the implementing agency. Right? Then the requirement again in 2021 amendment came in is with respect to creation of capital asset. Obviously, ever since the CSR law has come into play, the companies are either spending it on the operational expenditure, or there are companies which are building the social assets out of the overall CSR outlay. For example, say if the company is building a school building or a hospital building, so on and so forth. So while there were no provisions earlier with respect to the creation of the capital asset, while it was allowed, but in 2021 amendment, there is a specific now requirement that the company who is creating an asset out of the CSR outlay should carry out, two, three things. Especially the asset, first of all, should not be held by the company itself and should not be in the books of accounts of the company. The ownership of the asset should be given, to either a third party NGO, or it may be given to the beneficiary. Suppose if the asset is actually acquired for beneficiaries like self-help group or farmers or the collective entities, or it should be given to any of the public authority or the government authority who can manage the asset. But the mandate is very clear that the asset should not be capitalized in the books of the company. it has to be capitalized in the books of, or maybe given there is an ownership to all any of the three parties that we have mentioned. Maybe the intention is that the capital asset which are created by the company should not be misused by the company for the other business purposes, and separately keeping the ownership of such asset which ultimately belongs to the society also does not make sense, and maybe the amendment has come into that picture. The only downside of this is that while there is this, master requirement of creation of capital asset in the separate NGOs or separate beneficiaries books, but what happens to the, small assets which are basically, purchased by the company, either utilize on their own, like say laptop for the CSR teams, or maybe given to the third party. But at the end of the day, materially, it may still be considered as asset, but it becomes very difficult to disclose each and every asset in the financial report. So there is basically an anomaly. We have seen the companies taking different positions. We have seen the companies taking positions like that whichever asset that they were specifically acquired as an asset or purchased as an asset will only be disclosed. If there are any smaller asset which basically fulfills the overall materiality criteria, they will not disclose, so on and so forth. So we there is no clarity as of now on this, but at least the fundamentals provision remains that the company should not own any of the CSR asset. I think, yeah, that's about it from my side. Any questions, anyone has any live example that one need to basically, discuss?
Sir, we have got one question.
Okay.
Sir, what about NGOs? Are they required to deposit unspent money into Schedule 7 fund?
The NGOs are not required to, deposit the unspent money to Schedule 7 fund. The unspent money needs to be deposited by the company. So the NGO needs to return the money to the company, and then company needs to deposit the money to the unspent Schedule 7 fund. That too, if it is not pertaining to an ongoing project. So if the project is basically an ongoing one with the NGO where the company knows that the money needs to be given back to the NGO next year, then it should not go to the Schedule 7, but it should basically go to the unspent CSR account of the company itself.
Sir, another question has come whether CSR, why CSR is not applicable for any activities outside the India, like why it is only restricted to Indian territory?
Because the intention of the government is that in India, there is a huge gap between what society requires as a social fund and how much government can actually provide as a social fund. And that is why, first of all, the intention is that we need to first fill in the gap between the government funding as well as society requirements by the Indian corporates coming into play for the CSR activity. Till the time this gap is filled, there is no point in allowing the activities to be done outside India for some other country. And similar stand is there even under the income tax law, where the income tax law also does not allow the Indian NGOs which are registered under 12A and 80G to carry out any activity outside India. Similarly, even under the FCRA law, which basically regulates the foreign contribution or the foreign donation that comes to India, even that law is very clear that if the money comes to India to an Indian NGO, the same money cannot go outside for other countries' utilization. It has to be for the utilization in India. I think the intention is very clear that there is a huge gap in India. First, we need to fill that as compared to filling the gap for the other countries. Having said which, knowing fully that there are a lot of other countries which are developed countries in the world which allow such activities, and that is how you will see a lot of funds which are coming in from US or for Sweden or UK or Switzerland. So the developed countries do allow, but in our experience, a lot of underdeveloped countries which have similar provisions for the tax exemption for the charitable, or maybe developing countries, they are still not open for the usage outside India.
So right, sir.
Hmm.
So another question
Uh,
is, what is the correlation between social stock exchange and CSR?
The social stock exchange is basically the platform which is given, by the SEBI and the two of the stock exchange which are there. And the stock that platform basically is there, which is given to the corporates as well as NGOs to showcase, their either funding requirement or maybe the fund, the NGOs projects. And basically on those particular showcased projects, if the company requires or the company believes that some funding needs to be given, then the company can basically fund. So it is basically, I would say, a platform given to both the parties to come together. The good thing is that the India, yeah, I mean, over last 5 years, 10 years, is basically opening up in terms of its thinking. Obviously, there is a lot of work to be done in a way that the social stock exchange, no one would have heard, say, 5 years back. Singapore, UK tried it, but it did not succeed, and India is again trying for it. Secondly, even the instruments which are there on the social stocks exchange, like ZC, ZP, zero coupon, zero principal bonds, which were not very unheard of in India. The Indian regulators were not very much up to speed on it, but it is picking up. I mean, in last 5 years, where we see the impact funding or the the ZC, ZPs of the world, which will be ultimately considered as donation in a way, because there is no principal repayment, there is no interest repayment. Having said which, one needs to see that from the ATG perspective, how the tax office basically takes it for any such investment in JLC over the social stock exchange. So that's how it is in developing area. It is evolving. There are a lot of NGOs which are already registered. Couple of our clients also have registered and raised funds on the social stock exchange. So a lot, but a lot more work to be done, on that area.
Sir, one very interesting question has come. Aditya Birla is sponsoring for the number of students in relation to the questions raised in KBC. Does it form part of CSR activity?
Uh, can elaborate on the question? I'm sorry, I did not understand. We'll not be able to take say any client specific. I don't know whether I'm allowed to, but at least let us try and understand the situation here.
Yeah, actually they are telling that some of the in the KBC Kaun Banega Crorepati, there are
Right.
certain questions where a specific company is sponsoring few students, those who are answering right or they are giving the right answers in a opinion poll or any online forum. So do you think it will come under CSR activity that they are doing? It is a part of the upliftment of the student fraternity from the impoverished section. So is it a part of the CSR?
Yes, one can think about it. One is to just see that how the documentation is done, how it is being done in a project mode and not a stray activity or one-off activity. What is the final outcome to the students at the end of the day is something that needs to be seen. If it falls within the education theme of Schedule 7, if there is a specified impact that is being made under a project mode, then we can look into it. But yeah, I'm still not very clear. Maybe if the question can be elaborated, put ask me on offline, we can discuss it further. Yeah.
Right. Sir, are there any learning resources on preparation of impact assessment reports which you have mentioned in your presentation?
Learning resources, no, not that I'm aware of any. Obviously, a lot of third-party agencies who are doing the impact, they are doing it on the basis of their internal learning, their past experience and all. But I don't know whether there is any central, resource which is available to understand and learn the impact assessment study. Maybe a food for thought for me. I will probably check it. And even though I'm assuming that all these questions will be again sent, right? over the email. So maybe we will check on the back end and we'll revert on this separately.
Okay, great.
Yeah.
Sir, in your presentation, sir, you have mentioned that any company cannot spend CSR funds on any one-off event. Can you please state the provisions in which it states such
So
restrictions?
it comes out from the circulars in the FAQ. Unfortunately, I cannot flash it right now. It is not handy with me, but it comes out from the circulars and FAQs only. The intention is that the company, first of all, should not be, just tearing a check and giving something like a sponsorship, like for a marathon or event. The intention is that the company has to really get in the project, make it a project mode where everyone is involved, everyone knows that okay, what is the need assessment, what is the overall evaluation metrics, what is the implementation plan, and then what is going to be the outcome, and that is the intention of the project. Having said which, obviously, if there is any specific one-off event which itself can be done under a project mode, then it's not a problem. But the idea and the intention of the legislation is that merely telling a check like a sponsorship is not considered as a part of CSR. Yeah.
Right. Sir, you have seen in the last this MCA, this annual report, we have seen there are a lot of unspent money in the CSR fund from various companies. So, do you think any provisions is there in the Companies Act so that penal provisions is means for non-utilization of such fund from CSR?
There is penal provision we discussed in the in our discussion that if the company does not meet all this criteria of depositing the same to the unspent CSR account or depositing to a Schedule 7 fund, then the company has to basically pay the penalty. Obviously, when it is raised by the MCA, which is 2x, I mean 2 times the amount which was required to be made good by either UCSR account or by way of a Schedule 7 donation. So there is a penal provision on the company and the company officer as well.
Sir, in the CSR, there is any audit is compulsory in CSR or it is a part of this social audit?
If it is a social stock exchange registered NGO, then obviously that NGO needs to do the social audit. But otherwise, under the CSR provisions under the Companies Act, there is no specific requirement of an CSR audit or the social audit as per the company law requirements.
So one of our members has written, he is a social impact assessor. Can he certify social impact assessment of the fund that companies spend on CSR?
Yes, why not? I mean, again, the requirement of certification for any of the fund which is spent by the company, it comes out from the commercial requirement between the company and the NGO. As I said, there is no regulatory requirement, where the company law itself or any of the rules and regulations itself require you to certify anything. But in practice, at least what we have seen is that the utilization certificates which are given by the NGOs, the companies generally ask for either CA certified or the social auditor certified or impact assessment certified utilization certificates, so that at least, because it is company's ultimate responsibility, right, that the company has to ensure that the NGO has spent the money towards the CSR activity. So basically, it is a commercial requirement by the company, but as such in the law, there is no such requirement of the audit or the certification.
Sir, you have audited many private and government companies. What is the difference in approach between the two in CSR activities? As per it is your personal opinion, it is not of your organization.
So honestly, Dibendu, we have not audited, but yes, we have assisted many of the private or the government companies to meet their CSR requirements or to make them understand the CSR requirements, or maybe designing the project, so on and so forth. Our experience has been, at least when it started as a CSR compliance from 2013 onwards. Earlier, obviously, there was a lot of resistance in terms of, whether the company would want to do the CSR or no, because obviously there was always a window open that the board can give the reasoning of short spend, right? So in the private companies which were not very much in the eyes of the regulators, maybe unlisted company which do not have any any of the borrowings where the banks also could question. There was some bit of resistance, but over the period of time, at least the corporates have understood that CSR activity in a way also brings a lot of indirect marketing benefit, right? Secondly, obviously there are a lot of family houses, the promoter family, houses or the family companies who want to do the one or the other basically social activity, and that is being routed through the CSR. So now, last 5 years, obviously after 2021 amendment, where the company has to spend towards one or the other way, there is a lot of uptake, in terms of the requirement or in terms of the CSR meeting. But otherwise, there was in very initial year there was a resistance, but now there is not. And especially if I have to differentiate between private company and the the government company, as it was asked, the government companies were doing CSR even before the 2013 requirement. I mean, the new company law. There was a basically central CPSC guidelines, Central Public Sector Enterprise Guidelines, which require them to do the CSR. Obviously, it does not mention exactly 2%, but that requirement was always there. So for the government companies, this was not a new concept in a way, at least, on the fundamental side. For the private, yes. So government companies were always open. They were always doing the corporate social responsibility. Many of the big corporate houses were always doing, like Tata's, if I can name them. They were always doing the corporate housing, corporate social responsibility anyway. And now it is being picked up for all the small groups also, which were not earlier very much into CSR.
Right, sir. So another question is that do you think any improvement is required in CSR regulations as per the current provisions which is applicable now?
There are many improvements. I mean, there are many anomalies. We have discussed, few of the anomalies while we were discussing the presentation. As such, improvement required, and also my discussion, internally, along with many of the connects, there may be a lot of amendments which we are, kind of, awaiting, expecting in the near future. So a lot of anomalies are there. At the end of the day, having said which, when the guiding principle before the law is that the CSR law needs to be looked at, more broadly, more in a not in a very narrow and a myopic approach. So companies could take up positions, but obviously all the anomalies which are there coming out of the language should be ironed out, in the upcoming amendments.
Sir, you must know that CMAs in practice and also in employment wants to tap the opportunity of this corporate social responsibility. What is your advice to them?
Uh, that's a good question. My advice to them would be that, if the CMA is in practice wants to get into this, obviously one is to first get hold of the entire rules and regulation, the history of it. Maybe, discuss with a lot of professionals who are already working on the CSR front, build the capabilities towards first technical is one aspect, but also on the operational side where they can help the companies on the overall monitoring and evaluation of the project, or day-to-day routine review of the project expenditure, anything to do with the certification. Suppose wherever there is a option available for certifying the utilization certificate, so on and so forth. So the area is very wide. Yes, one needs to get good amount of exposure towards this, good amount of reading. Last 10 years of development needs to be updated, in the database and everything. And then there is no harm, in pursuing this. As I said, I have been pursuing this since last 10 years anyway. There are good amount of opportunities. The pool of the CSR expenditure that is increasing year on year, and the government is also supporting in a way where the third party impact assessment is required, and so on and so forth. So I mean the opportunities are very much, but yes, one needs to basically demonstrate the capabilities.
Right. Sir, you must be means advising client to do the ideal CSR project. Can you please elaborate any parameters to make a project ideal in with respect to CSR?
Yeah, so it is just summary of our last whatever 45 minutes discussion. Parameters, as I said, remains the same. First of all, it should not be a one-off event. It should not be part of your normal, business activity. It should be something which is over and above the business or outside of your business. One needs to look at what is the basically impact area, right, and how it is going to be impacted on the society, how it will be monitored, and so on and so forth. For a good project, it should be very well clearly defined objectives, very well clearly defined outcome, and very well clearly defined the implementation modality. I think that should help. That works out to be a good project. So whenever we get a project from the NGO which is not very well laid out in terms of all these aspects, that is where we also assist that look, you have to design your project in such a way which becomes appealable, to the corporates at the first stage. Plus, the corporate should get a confidence looking at the data and looking at the project report that this NGO is capable of doing it. So all these areas one needs to look into mind. One needs to take into mind that the project is good, the NGO will be able to deliver it, and NGO will be able to deliver it within the timeline that the company gives. Because otherwise, as we discussed, it's the whole idea of unspent will come into picture. So that makes, I mean, all the factors together makes a project a good project. Ultimately, it should be implemented and there has to be a good impact, which makes a project a good project.
Sir, you have contributed to our monthly newsletter, Sukhino Bhavantu. Sir, we
Yeah,
request you whenever there are any provisional changes in the
of
CSR,
course.
our members and students should know, and we request you to contribute in our upcoming
Of
issues.
course.
And sir, last question to you. Uh, with the new government in place, are you expecting a major change in CSR provisions?
No, so one of the major change, 2013, the earlier government had basically, implemented this law in 2014, and thereafter, if you see, there are a lot of circulars and lot of clarificatory letters which keeps on coming. So it's not like that the government is dormant on this regulation. This regulation is very active. Then in 2021, when there was this substantive amendment which happened where which put more and more onus, on the CFO, it put onus on the board, it changed the complete disclosure requirement in the annual report. And it basically came out with a new detailed FAQ which superseded all the earlier circulars. So government is anyway active. What we are expecting is that the law will remain as is. There will always be some or the other development, either on the side where if the government feels that the companies are not meeting the requirement or it is still not taken very seriously, then the tightening of the law, which we are expecting very much because the government is quite serious about it. Or if there are anomalies, then the anomalies needs to be kind of cleared out. For example, we discussed a couple of examples while we were presenting that earlier the employee volunteering, it was not very clear. There were a couple of circulars in 2012 or 14 which somewhere allowed employee volunteering, taking number of hours into average salary, so on and so forth. In 2021 amendment, government came out, said nothing doing. There is a lot of subjectivity. Employee volunteering hours cannot be encashed. Similarly, corpus, which was earlier allowed in 2021 FAQ, the corpus is now not allowed. So we are expecting a lot of such, clarificatory developments and not any major substantive whether the law will be gone altogether, or so on and so forth. So nothing like that. But there will be good amount of development which keeps on coming, which will clarify the law further.
Can you share any experience of turning around a failed CSR project?
Yeah, there are many. There are many. We have seen experiences where the NGOs, which are obviously not our client, we were serving corporates where the NGO could not deliver for whatever reason. There were a lot of delays in the project. So there are a lot of experiences on the failed project. But yeah, I mean, there are no project in the public domain as such, which I can cite as an example to everyone. But this happens. I mean, and that is why what we have been doing, especially whenever we are assisting the corporate side, what we have been telling the corporate is that the funding should be, as I said, done after a very well due diligence, looking at the NGO's capabilities, and the funding should be done as earlier in the year as possible, right? So that if the funding is done in November and December, there are a fair amount of chances that the NGO will not be able to utilize this money. So that is what we have been suggesting. It is being implemented, by many of our clients, and thereafter it is working fine. Yeah. 2021, when this whole amendment came in, for initial couple of years there were challenges, but more or less it is ironed out, at least for the clients that we are suggesting.
Thank you, sir. I think you have elaborately explained and vividly given the examples of the various questions which our members have provided, and we thank wholeheartedly for your kind presence
Thank
in spite
you.
of busy schedule. And before we close, I want to just request our next webinar, 19th webinar of Vasudhaiva Kutumbakam series is coming up on 25th of October, and the topic is overview of green battery concept and its future in enhancing sustainability in India, with also case studies. And our speaker is CMA Chandrasekhar Chincholkar, who is a member of our institute and is a consultant. And our ESG certificate course, second batch, our last date of admission is 15th October, and I request all the participants, those who are eager to understand the nitty-gritties of ESG from the experts who are working in the sustainability sphere, from our institute, very nominally priced, and I request all of them to join the session, because I think by 15th means today is 11th. I think 3-4 days are left to take admission for the course, and we have our monthly newsletter, Sukhino Bhavantu. I request all the participants to at least contribute and give your suggestions so that we can improve our publications in the upcoming issues. And with this, I thank today, being Ma Ashtami and Navami, we had a festive fervor, and still we thank the participants who have joined today's session. And I thank wholeheartedly our chairman, CMA Dr. Ashish Satte, for always encouraging us to organize such webinars. This every fortnightly we are organizing it, and I thank all the SSB members, including Dr. Ranjit Krishnan. Sir is always motivating us. I also acknowledge the contribution of our teammates, CMA Dr. Aditi Rasgupta, for her continuous unstinted efforts. I thank our President, CMA VB Nayak, and our Vice President, CMA TCS Srinivasa Prasad, for their continuous motivation in organizing all activities in the SSB sphere. And with this, I take an announcement of closing today's session. I thank all participants. Thank you all.
Okay, thank you. Thank you.